Welcome to Oklahoma Real Estate Radio. I have Jeremiah Lindsay with Flat Branch Mortgage joining us today. Jeremiah has been a lender for 7 years. He is a member of the President's Club at Flat Branch Mortgage, and he is also a top originator in the Scotsman's Guide. I am so excited to have him here today talking to us about some of the secrets that we need to know when we're selling real estate. Hey, everybody. Welcome to our show today. We have Jeremiah Lindsay with Flat Branch Mortgage. Welcome, Jeremiah.
Hey, thanks for having me on, Christy.
Absolutely. I'm so excited for you to be here. We've worked together many times over the years, and you bring a lot of energy to the table and what I call get it done attitude from a lender. So I appreciate that.
All right, thank you. Thank you. That's the goal.
Tell me just an oversight. What's your view going on in the lending business and changes that are coming that's going to be affecting us?
Yeah, definitely. I think we've all seen the shift over the last 6 months. Rates have slowed our market down. Refinances are pretty much non-existent.
Okay.
On the purchase side, in our market, in my opinion, although it's slower, it's still moving. We're down a little bit, but not a whole lot. And the price point in that $200,000, $300,000 range, they're moving along pretty good.
And you said it's down. What do you think percentage-wise, if you had to guess?
Our team's only down about 10%.
I mean, the industry.
The whole industry,
right? Yeah.
I don't know off the top of my head on that, but it's definitely down. But
probably in the 10% range.
Yeah.
Yeah. Okay. What do you expect coming up for 2023? What should we be preparing for?
I think the first quarter is going to be interesting. I do believe it's going to be slower. Just right, you look at right now, rates got a little better the last couple of weeks. That's good. But everything I'm reading, the first quarter might be pretty rocky for all of us. So I think it's going to be a time for us to get out. And the separation, though, I mean, at this time is when whether you're an agent or a lender, it's a time to go out and get some market share, in my opinion.
Yes.
And really try to grow yourself and separate from other people, because there's going to be a lot of us in this industry that aren't going to make it. It's already happened.
Yeah.
And so I think it's going to be a big differentiating factor over the next 6 months.
That's interesting. What are rates today where we're sitting?
It just depends on loan program, obviously. I might say low sixes on govies.
It's not too bad.
No, not bad at all. Over the last couple of weeks, they've really gotten better on investors' loans. I've got 9 working right now, closing in December and January. All of them got under contract over the last 30 days or so. 25% down on an investor loan is really good right now. Upper sixes, low sevens. You get a pretty good price adjustment with putting 25% down instead of 20. So if you have investors that are willing to put in a little extra money there, which I know has to work in their numbers, but you can get a pretty good price break.
So investors, are you seeing a pickup in that as far as business?
Big time.
Interesting, because that is what I'm hearing.
Still a lot of out-of-state investors too, which good or bad for our market. I think one of the biggest problems is we still have an inventory problem. Yeah, the market's slowing down. There's less buyers out there, but there's not a whole lot of inventory either. You got prices numbers than I do, but in that $200,000 to $300,000 price range, there's not a whole lot of inventory out there.
Oh, I would say we're still probably down 37% from where we should be in a normalized market. So in many ways, that's going to save us. It's not as if there's a glut of homes on the market and interest rates are high.
They're not.
And prices will be affected that way.
2008, look at the inventory of 2008. It's totally different.
Right.
And I tell borrowers that. I'm like, that say I want to wait till rates drop. I'm like, well, when is that going to happen, one? And number two, 6 months from now, that house that maybe is 200 now, maybe 220. Nobody knows.
Yeah.
And so if you're comfortable with the payment, let's get you in now, and hopefully you can negotiate a good deal.
Yeah.
Definitely have a little more options available to us than what you didn't have over the last couple of years. But I think it's still a pretty good market to buy in. I really believe that. You're not paying over asking for the most part, unless it's just a super competitively priced house.
Exactly.
You can get a good deal right now, which
you really can
get buyers good deals over the last 24 months.
Yeah. So right now, with what's going on with the buyer's reaction to the market, what are you seeing with that? So we know what realtors are reacting, but how are the buyers out there reacting?
They're shocked, but literally a lot of times I'll break it down to them. If they're looking for a $300,000 house a couple of years or even 6 months ago, you may be paying a 4% interest rate instead of a 6%. But that $300,000 house, if it was nice, you may pay it above asking with an appraisal gap and everything else. Now you may be able to get it for asking or maybe a little under, maybe get some closing costs paid. So why not go ahead and pull the trigger now? Even if your payment's a couple $100 more, if you're paying $20,000 less for the house, that
Yeah.
what if it's not a bad market? And I firmly believe that.
Well, they could get the house they want now, right? If they refi in the future.
If I could get buyers and I'll break it down to them, I'll put it on our cost estimate and show them like, hey, here's a scenario that maybe you would have seen 6 months ago. Here's what maybe between, if I talk to the agent, hey, if they've got a specific house in mind, maybe think they can get some closing costs paid or whatever it may be, and send them a cost estimate here, it usually puts their mind at ease. As long as they're comfortable with the payment right now, you can make your payment, you're comfortable with it. Do you want it to be lower? Of course you do. We all do. Who doesn't want a lower payment?
Sure.
But I also tell people you're probably not going to see twos again, not anytime soon.
Never.
Ever. And just get that out of your mind. Can you get back down in the high fours? Probably. When? I don't know for sure. I know that's probably a topic for us later on, but from everything I'm reading and just listening to the Fed chair talk yesterday, maybe next year that we'll see some drop at some point, or there's going to be some ups and downs. I don't see them going up much higher than what they are, if at all.
So they got up to around, what, 7.5?
They were in the sevens there for a little bit.
For a minute.
We're pumped. If I can lock a loan right now in the fives.
Wow, that is really good, actually.
It's really good compared to what we were. And then I saw a lot of investors that were mid sevens and having to maybe buy a point even with that. And it maybe didn't make sense to them. And now if you go upper sixes or low sevens without a buy down, it does make more sense. And I don't know, as long as you're cash flowing, most of the people I work with aren't flippers. They're renting them. So the lower rates have seemed to help them get back in the market a little bit.
Back to those institutional buyers, the investors, are these guys moving money from housing markets in other states?
Got several that are, one guy in Colorado is doing 5 right now. He bought 5 at once, all in our area, which makes it easier for me because we'll work all 5 of them like it's basically one loan.
Okay. Yeah.
California, Washington, and buying properties here.
2
of them plan on moving here. One of them's got a lake house here. And so they're just building a portfolio to hopefully retire with. So, yeah.
Yeah, we've had a lot of movement into the area in the last couple of years.
And I think I tell people that too. Look at your rental market here. You see it.
Yeah.
Rates are higher and your mortgage payment's higher. Your rents are going up too. Everybody. I get phone calls all the time. Hey, I was month to month, landlord wants to sell the house, or hey, my rent's going up by X, Y, Z. And you can't blame the landlord either. That's the market we're in. It is
Absolutely.
what it is.
There was a lot of people that were month to month, or maybe their lease was coming to an end that probably got sticker shock in the last couple of years.
Yep. And then they're scrambling, calling you and me to try to find a house in 30 days. Hopefully they're able to finance something. But yeah.
I hear that. You mentioned a little bit ago about a points buy down, right? And that's a newer thing that we've seen in the last 6 months or so in the market. And there's probably a lot of realtors still that don't really understand that. And for those of us that are wanting some clarity on that, how does a point buy down work and how can we explain that to our clients?
So basically what you're doing is just prepaying the interest up front. Let's call it that. Like a point is 1% of the loan amount. So, $100,000 loan is $1,000 for a point.
Gotcha.
And how much a point translates to getting a lower rate just depends on each loan, to be honest with you. Sometimes you're right on the cusp of getting maybe from a 7.25 to a 7%, and it may make sense to do a little buy down. And I think every situation is a little bit different. But to be honest with you, Christy, right now, in most cases, I'm not encouraging buyers to buy down a whole lot unless they just need to. If they're just payment sensitive, they have the cash, by all means, if that's what you want to do it. But if you got to spend $7,000, $8,000 in points buying down points to get to a rate, it may not make sense because you may be calling me in a year or 8 months, and the rate's already lower than what you bought down to, and you could have refinanced for a couple $1,000s or whatever it is, and instead you paid $7,000, $8,000 to save a couple $100 a month or whatever. And I don't know that it makes sense. In every case, it's different. But the short answer, basically what you're doing is buying down the interest rate on the front end. If you're buying down points is what you're doing. But it takes a lot of money in a lot of cases to buy down points to lower your payments a little bit. And I don't know that every case is different, but a lot of times it doesn't make any sense in my opinion.
That's good information. Speaking of that, what about adjustable rate mortgages right now? We
offer them. Companies typically aren't quite as competitive as banks.
Okay.
But that's an adjustable rate mortgages are short-term mortgage, so it's more tied to the Fed and raising rates. So the adjustable rate mortgages aren't as favorable as what they were even a couple of months ago, in my opinion. I don't have them in front of me, but there's not a huge difference between a 5-year 5.1, 5.6, or 7.6 ARM loan and a 30-year conventional. It's probably within a quarter point of each other. So it doesn't make as much sense now as
to
what
take
maybe
that
it
risk
did a couple months ago. Again, it's a case-by-case basis. We offer them, most mortgage companies do, and definitely banks do. They'll say, as much as I don't like to say it, banks on an ARM loan typically are going to be more competitive than a mortgage company will be.
And a concern with those are that you are at risk for what's happening in the market, and the payment could actually go up. So we just don't know.
Every month, you're going to want to refinance that thing. It's going to happen. At least on a 30-year. Do I think you're probably going to refinance? Do I think most everybody that's buying right now that has bought over the last couple of months, do I think they're going to refinance? Yeah, they're going to, most likely. It's just when, and that's the unknown. I get buyers asking me, like, what are your thoughts? I'm like, I don't have a crystal ball. Nobody does.
Yeah.
I think it's going to happen in the next year, but nobody knows for sure.
This is an interesting market for sure. Something that we haven't seen on many levels.
And it happens so quick. That's the crazy part.
Yeah.
In January, my team and I were looking back at loans. In January, we were locking loans in the twos, 2.875, 2.99.
Yeah.
So less than a year ago. And now you're 6 plus.
The Fed came in and was like,
shut this thing down.
Yeah. And there still wasn't enough houses. There still wasn't. So that really did work if that was their goal. It did work.
And that's one thing that they can always control us with. And I think as inflation gets under control, then they're going to start working their way and bring rates back down.
Yeah.
It's just nobody knows for sure when they're going to want to change course a little bit. And so I think it's just going to depend on how quickly they get inflation under control.
We need to be paying attention weekly. We need to be paying attention daily to what's happening right now.
Yeah. In our world, like MBS Highway, Barry Abebe, I don't know if you know who he is. I have him up all day, every day. And that's all he does is talk about our world and real estate and mortgage. And he thinks it's going to be sometime next year, but when, nobody knows.
Jeremiah, let's talk about what goes on in the underwriting process. When you get that contract that the buyers have gone under and you get moving forward, what is the process that the realtors and us in this community just don't get to see? And give us an insight on that.
Absolutely. Love to. So it is a process, and I would like some newer agents to understand that, depending on the loan program and depending on the buyer too, it gives you a better idea of what time frame you're looking at. But so you collect all your income documents up front, hopefully before you got under contract. We'll submit it into processing, and it goes into underwriting. What an underwriter does is we all give them a bad name, but the only thing they're doing is verifying the information that we got from the buyer is correct, and we have it all to meet agency guidelines. And agency guidelines, I'm talking about VA, Fannie Mae, Freddie Mac, which are your conventional loans, USDA, whatever you're doing, FHA. They got certain guidelines that all of us have to, and they're just verifying that we have everything, whether it's appraisal, title work, is a clear title work, all your income docs. If you're W-2, typically it's pretty straightforward. Where it gets complicated, and I joke with people, on the front end, on the self-employed borrower, I'm like, look, we're going to ask for everything but a blood sample. It's going to kind of stink a little bit if you're self-employed, but you get scrutinized a lot more. And there was a lot of changes with COVID, when COVID happened, that still are in place. Hopefully they relax them a little bit. But for self-employed borrowers, it still is pretty tough, and they've relaxed some. Employed borrowers are the ones that really, it's a tougher process and getting the needed documentation from them, and it can be a little daunting.
So self-employed buyers, we could be talking about realtors, anybody who owns a business, this type of thing.
Yep.
Let me ask you, if they have an LLC or an entity, put themselves as an employee of that entity, give themselves a salary, and maybe they're taking distributions quarterly or whatever they're going to do, is that a different picture in the purchasing process when they're going through that underwriting versus a 1099 or...
Not really. You're all going to be self-employed. The biggest thing that an underwriter is going to look at when you're self-employed is how long you've been doing it. Preferably 2 years or longer. If you're doing a conforming loan of some sort, obviously there's bank statement programs and things like that we can do if you want to get non-QM and if we need to go that route. But no, 1099, whether you got an LLC, an S Corp, whatever you got, if you're self-employed, you're pretty much going to go off the same guidelines. Christy, nowadays it's gotten so much automation. Real quick, not to switch topics,
go for it.
but if you're W-2 and you work for a big company, a lot of times we can validate your income. So I can validate your income from the get-go. Let's say you work for, I don't know, a big company that's on what's called WorkMember. The second I get an app, I'll pull in your verification of employment. At that point, as long as I can validate your verification of employment and your income, I don't need pay stubs. I don't need W-2s. I don't need anything income, which is really nice. And then you can validate your assets as well. So literally, we can go into underwriting and it comes out within an hour. Like if you're a W-2 employee and I can validate your assets and your deposits, your bank statements, you can go into underwriting with basically a driver's license. And that's about it, which is really nice. Hopefully it doesn't take our job because we automate things. You can get an appraisal waiver. You don't need an appraisal either. And then we're needing title work.
Yeah. At that point, that machine will mess up at something because there's always something going on. So you need humans behind the curtain for sure. Let's talk about, what do you wish that the agents knew about the lending process?
That it is a process and that we got to have everything. Sometimes, especially if it's a newer agent, I'll get a contract that's not done correctly and we'll tell them what we need to do and try to train them a little bit on that. And then also that it's not straight, hey, we're going to go from A to B. It's a process. You got to have title work. You got to have an appraisal in. And there's different loan programs. I send out something to a lot of my agents that I work with that talk about closing costs that can be paid. A lot of agents don't know. I'll get a contract. Hasn't happened as much lately, but with maybe 8% closing costs paid. And they're trying to go FHA. And I'm like, I can't do that. And so just understand.
So go ahead and tell us, what are those limits? We'll share that.
So a lot of your government loans are going to be 6% FHA, USDA. Conventional can vary anywhere from just 2% on investment property, 3% depending on what you're putting down, all the way up to 9% on a conventional loan. But they can vary. So I would say if you're an agent and you don't know for sure, get with your lender as you're writing up an offer and ask for a cost estimate, and the lender can let you know what you're looking at.
How much to write those closing costs for, what the limit is.
Yeah, and the same goes with if you got an FHA loan, for instance, and you're trying to buy a house without utilities on. Agents don't know, hey, that house isn't going to work. I think it's with all of us. It comes with experience.
Yeah.
You know how it goes. You've been doing it a long time, and a lot of things you just got to learn. But I'll get agents try to do that, and I get a contract, or they'll send me the property. I'm like, no, there's no way this is going to work for FHA. I just think a lot of it's just experience.
So speaking of that, when we're talking about an FHA property, what are some of the red flags? If you have an FHA buyer and you're touring some homes, what are some of the red flags you need to be looking out for that this house is not going to go with this financing package?
The number one thing I'm going to look at is, if I'm looking at pictures online, does it have flooring? Does it have peeling paint? I mean, you'd be surprised. I get it happens. Peeling paint, flooring, trim, are the appliances there? I'll look at it and it may not have utilities on it. It says that, or if it's sold as is, that's a big red flag to me. Because last thing I want is us to go get under contract, get an appraisal done. They probably did some inspections, and I see it happen sometimes with agents. And
money out of pocket for these buyers
that may not have a whole lot anyway. And then we find out, like, hey, this house, we should have never even been going FHA or whatever it is, VA, USDA. So I just think that's something that all of us collectively could work together on. We try to look at properties the best we can when we get a contract and like make sure it's going to work. And if we have questions, we will ask the agent, like, hey, are you sure this house, because we haven't been there, sure this is going to work? And they're like, yeah, okay.
Well, that's interesting to know that you do that due diligence of going in and checking to see if you think, just to make sure that you think this might pass and not give us issues based on what you can find online, I'm assuming.
And for FHA, another thing that a lot of agents don't know, and I get this, that'll happen, I don't know, every couple of months, it seems like, especially when there's flippers out there. You got to be on contract for 90 days before you can get under contract on a sale. So one of the things on our checklist that my team does when we get a contract is we reach out to the listing agent, introduce ourselves. Hey, Christy, is this a good phone number to reach you? What's a good email address? And has the seller been on title for 90 days? Because if it's a flip property and they've only been on 60, then that's a conversation we're all going to have. Okay, we'll have to do we can't get under contract technically until 90-day mark. You're probably going to have to get a second appraisal and everything else, which isn't a buyer cost, but that's something to look at as an agent, and especially if you're on the list side and you're selling a flip home and you got an FHA buyer, you need to look at how long that your seller's been on title.
That makes a lot of sense. Essentially, that would be a requirement.
That's a deal killer.
Yeah.
You're not closing that loan. Not till 90 days or after.
Yeah, they're just going to have to extend that contract or something. Figure out a solution around that.
Yeah.
We talked a little bit about some of the FHA and conventional. What about Native American loans? I hadn't heard about them around for a minute, the market the way it was, but I am seeing them come back. So for the agents who are not familiar with Native American loans, what do they need to know about those?
So it's a great loan. And a lot of people in Oklahoma have a tribal card. So as long as they have a CDIB card and they qualify, most likely, depending on credit and all that, for a Native American loan, which is a lower down payment. It's 2.25%. It's got reduced interest rate, so it's a government loan, so it's about like an FHA and any other government loan. Lower mortgage insurance than regular FHA. And one of the biggest things is, depending on the income limits, tribes give out free money. I say free money. Every tribe's different, so I would encourage anybody that's listening to this, reach out to your tribe and find out about their mortgage assistance program, MAPS program. And a client the other day got $50,000. $50,000.
Wow.
Money from the tribe. And a lot of that they base on first-time home buyer, household income. There's things they're looking at. Everybody's not going to get $50,000, but if you qualify, you need to check it. And keep in mind that these are tribal or kind of like government agencies. They don't get in a hurry about anything. So if you think that if a client's reaching out to you, hey, Christy, I think I might want to be in the market to buy a house in 3 months or 6 months, that's a time right then that you need to be reaching out to your tribe to find out, do you qualify, and get the process started. Because some of them take 3, 4, 5, and it was even longer than that during COVID. But it can take time, but it's free money for the most part, depending on what tribe you're with. So it's definitely advantageous for our tribal buyers to look out ahead of time and get approved. Because I'll get clients that are like, hey, I got to buy something in 45 days. And they'll reach out to the tribe and they're like, we're 3, 4 months out. Well, what do you do? And move forward now? So I would just encourage anybody that's thinking about a 184 loan, reach out to the tribe ahead of time, reach out to a lender and get some questions answered to see what they can qualify for.
So if you have a buyer that's looking to buy in the next 6 months and they want to do a 184 Native American loan, they need to be reaching out to their tribe like now, today.
Yep.
Okay.
Yep.
What about USDA loans? Let's talk about those.
I think they're great, especially right now. I'm getting a lot of them in our rural areas, and they're getting some closing costs paid because it's less competitive. That's the majority of the contracts we're getting are with closing costs paid or USDA or more rural properties. I think that it's just a less competitive market. Not always, but a lot of times. 100% financing, obviously. Your mortgage insurance on that is reduced as well. Lower interest rates. It's a great loan. Your requirements are a little more strict, your debt to income ratios and those types of things. So not everybody maybe doesn't qualify or you don't qualify for as much as much of a loan as maybe like an FHA that you can run your debt to income ratio up to 56.99.
Gotcha.
USDA is more capped in the low 40s or upper 30s, just depending on the circumstance. But a great loan, typically a buyer is not going to qualify for as much of a house. That's really usually the downfall. And there's some household income that you have to meet.
On that. I thought there was, but I wasn't sure if it had changed. Were people using USDA loans a lot in the last couple of years, or did those kind of go away as well?
They went away for a little while just because everybody wanted the conventional loan.
Yeah.
But they're slowly now coming back, along with all the government loans. VA got a bad rap for a long time just because the VA appraisals in our area, there wasn't enough appraisers that are approved for VA. And we've talked to some appraisers that were approved, and they're like, hey, we're working with the VA to try to get more appraisers. It was a tough market. And I get why, if you're on the sell side, maybe you didn't want to wait for a VA appraisal and stuff, but those are coming in 7 days. Gotcha. On the area.
That's pretty good.
That's one of the best. It is the best loan out there, other than a conventional loan with 20% down. Especially
so give us the eats on the VA loan.
So especially if you get 10% or more disability income, you're not paying that VA funding. 100% financing, no mortgage insurance. You can use it anywhere. So it's not like a rural development loan where you got to be in a rural area. There's appraisal-wise, it's more lenient than FHA. For a long time, the biggest problem we had was appraisals were taking longer in our market, but that's not the issue anymore. It's a great loan. So any of the listing agents out there, if you're looking at FHA, look at the VA just as much and help the veteran out if the offer's good.
Absolutely. I love that. That's awesome. Jeremiah, tell us about overlays.
Yeah.
I don't think realtors know about overlays. You've got your basic requirements for the institutions, Fannie Mae, Freddie Mac, those types of things. And then you have your overlays. So talk to us about those.
So you do. So you got Fannie and Freddie, your conventional. They got their agency guidelines. You got Fannie, Freddie, FHA, VA, USDA. All of them have their guidelines, which is their minimum thresholds to close a loan, right? You got mortgage companies and banks that put in extra overlay that they think are there just to help curtail defaults and things like that.
Sure. They're requirements.
They're just additional requirements, as all overlays are, that are in place by that mortgage company or bank. And almost everybody has some to some degree. Some banks are a lot more than other banks, and some mortgage companies are a lot more than other mortgage companies. But I would just say get with your lender and find out what their overlays are. And
ask that question. What are your overlays? Just so that they understand versus just working off of the FHA requirements. They need to be thinking about those additional things that may come into play behind the scenes, and as sometimes they do at the last minute.
Yeah.
Yeah. Do you have any special buyer programs right now that agents should be aware of so they could be passing this information on to their clients?
We specialize in a lot of the 184, so we do a lot of the down payment assistance. So I won't say that's something we specialize in, but it's something we do a lot of, and I don't hear about a lot of lenders talk about it. I don't know why. Maybe they just don't know, especially if you're on online. Here's another reason why you don't want an online lender, in my opinion, is because they don't have a clue what a 184 loan is. They dang sure don't have a clue what MAPS programs are through the tribe and what can be offered to you. So that's why I always tell, whether it's me or anybody else that's local, get with a local person and get their opinion on. We have the standard 3-2-1 buy down, 2-1 buy down, all your down payment assistance programs. We do double wides, single wides. We do pretty much anything residential, except for raw land.
Okay. Good to know. So you guys do mobile homes as well. So that's great.
Yep. Double wide, single wide.
And what about any state programs right now or citywide that you know of that's giving grant money?
Tulsa Housing Partners, I believe it's still $10,000. Don't quote me on that. But Tulsa Housing Partners and CAP, both are good local. The problem you run into with those are the income requirements are tough, the household income, and making sure a borrower qualifies. That's the biggest issue you run in with those. But they're a great program because then you're going off of your bond program sets a rate, right? So whether it's OHFA or REI or whatever it may be, they send myself and every other lender in Oklahoma a rate every day, or they send us a rate when it changes. Where the local down payment assistance, they go off market rate. If I'm at a 6.125 on this FHA Govy deal, and I'm giving this lady, I got her hooked up with Tulsa Housing Partners, and she's getting free $10,000. She's only getting a rate that's below what a bond program is, but she's getting enough money for a down payment and probably some to cover some closing costs. There's some caveats there. You got to go through first-time home buyer counseling and some other things, but it's worth it. Again, as long as you're living in the house for the time period that they want you to live there, it's free money.
Where could they go to find this information out?
Yeah, get with me, and I'll hook them up with Mayvang and the ladies that run that program.
Awesome. Let's help some home buyers get into homes this coming year for sure.
Yeah. I still have, even with all the internet that's out there, that people think you got to have perfect credit. And typically, and you got to have 20% down. I literally have a conversation probably a week with somebody telling me, I don't have 20% down yet. I don't want to do an app. I'm like, you don't have to have 20% down. Or, hey, I don't have perfect credit. I don't have a 720. You don't have to have a 720. Get with a lender, do an application, and work with somebody that will work with you. If you're not ready then, that will educate you on what you need to do to get ready. I always tell everybody, pretty much everybody can get into a house as long as you do the steps that are needed to get there. If you're not ready now, okay, will you be ready? We can put it on the simulator. We can let you know what you need to do to get ready, whether it's 2 months, 4 months, 6 months down the road. We can get you into a house. It just may take a little time. But you don't have to have perfect credit. You can have less than perfect credit. And you dang sure don't have to have 20%. But that's still, even with all the technology we have out there, people think that you do.
I've heard that a lot recently from buyers, and I was actually kind of shocked because I didn't realize that myth was still out there.
It is.
20% down. Let's get into this, Jeremiah. When realtors are working with a client, right? How do they make sure that they get with a lender before they go see houses versus let's get these people into houses before they know what they qualify for?
Yeah, definitely. Get with the lender ahead of time, encourage your buyer. If you need to go show them a house to get them your feet wet, fine. But that way, what program that they're going to qualify for? Or do they need 100% financing? There's so many variables that a lender has to look at, whether it's debt to income ratio, whether it's income to meet certain loan criteria. And so until a lender gets an application, they don't know. I get all the time my people call me like, hey, if I give you my rough credit and this and that, can you tell me what I'm going to be pre-qualified for? And I'm like, no, not really. I can't because I need an application so I can figure out what are your short-term goals? What are your long-term goals? Whatever it may be to figure out what loan program you're going to qualify best fit for you.
Yeah.
And payment-wise, it is. And there's no sense in somebody looking at a $300,000 house if they want a payment that's going to be more in the $200,000 range. Because once they've seen 300, guess what they want? They want the 300. Yeah.
I call that it's math, not magic.
Yeah. Yes, absolutely.
What about people getting into real estate right now? What advice would you give them?
I just speak for me personally. I think that as I've grown, one of the biggest things that I do is we keep in contact with our past clients. And obviously you got your center of influence, but our past clients are one of our biggest referral partners. They send us a lot of business, whether it's themselves or a friend or whoever it may be, family member. So I would just say whether you're a lender or an agent, getting into the business, really tap into the people around you and do the work. It's not easy. The hardest, I can remember getting into this business in 100% commission and you're over there grinding it out and it takes time, and don't get discouraged. You stick to the plan, but show up every day. Don't think that making phone calls for an hour a day, whatever it may be, or doing a little bit of work an hour a day and you're going to just blow the doors off the real estate market. It's not going to happen. So I do the same thing every day. I'm at work, pretty much the same thing. I'm like a robot as far as what I do from the time I get to the office to the time I leave, and have been doing the same thing for the most part for years. And I feel like it's paid off. And I think that's what all of us have to do. And I hear people in the mortgage business say they're slow. And I'm like, well, what are you doing though? Are you actually working? Are you making the phone calls? Are you going out and meeting with agents? Are you going out and doing the work? And most of the time the answer is no. So I would just say to anybody that's just getting into our business is find a good coach, a good mentor, whether it's somebody like yourself or your broker that'll help set up some good regimen to do every day, and do it.
Right.
And don't think that it's just going to happen on its own, because it usually doesn't. And it can be discouraging. I think we've all been through that. I know there was a time when I was like, I want to throw my hands up. But slowly you figure things out. You figure out what works and what doesn't work, and grow on it. Grow on what does work.
You can quit real estate for the night, but when you wake up in the morning, get back to work.
Get back to work.
If you've had a rough day, like I quit, never doing this again, I'm out of this business. And then the next morning, no, I'm doing this again.
And there's days like that. If you're, and you know how it goes. There's easy deals and there's tough deals. There's whether it's on the lending side or title work or whatever it may be, every deal's unique. And there are tough days. That was my Tuesday. At the end of the day, I told my team, I'm like, glad this day's over with, but it's going to be a good day. And we're going to fight another day. Things come up, and you just got to go with the punches and keep working.
Yeah, absolutely. I love that. Jeremiah, tell me, what does home ownership mean to you?
I think accomplishment, would be a good word if I had to have one word. Just seeing the enjoyment of whether it's a first-time home buyer or somebody that maybe bought a house years ago and it was a first-time starter home, and now I'm able to do their loan, and it's a nice 4-bedroom or 5-bedroom house with a pool. I just feel like that it's an accomplishment if you're able to own a home. And I think that everybody should have the ability, and everybody does have the ability to do it. And it's a big purchase as people get older. And it's usually their biggest asset as well. But when I think of home ownership, that's what I think of.
I appreciate you joining us today, and I know you're going to bring a lot to the listeners. I'm excited to get this podcast out.
Well, thank you for having me.